Welcome to the Business Lounge. Tips and tricks, an expert with me who will hopefully be able to impart their knowledge and their expertise on any of the questions that perhaps you might have. Today we're talking all about finance, all about accountancy. Melvin Sadofsky, who owns the MWS Group based in Hull and East Yorkshire, is with me. Now, Melvin, we've got some questions. They may be very simple for you to answer, but with the hope that there may be some people who run SMEs
I hope they are simple
watching this. I'm sure they will be. First of all, accountancy. I mean, yes, there are lots of accountants around. How do we go about finding a good one, if you like?
Okay, well, I'm a member of the Institute of Chartered Accountants. The Institute does have lots of literature which will enable you to find a local chartered accountant. But in my opinion, the best way to find an accountant is to speak to a colleague who already has one and to see if you can gain a recommendation for his accountant, because somebody who's proven, tried and tested is probably going to help you more than someone of whom you're not sure.
And now what about the sort of company that I want to set up? I don't know whether I should be a limited company or a sole trader or which way I go. What are the advantages of perhaps becoming a limited company?
Well, limited company means limited liabilities. So what that normally means, unless you start to give personal guarantees, is that you'll not lose anything in your business more than what you inject into the company. However, there can be taxation reasons for doing that. Or alternatively, there can be some benefit, at least initially, in being a sole trader or a partnership. It does generally depend upon the type of business that you're involved with, where you're going to be incurring substantial liabilities, buying stock, etc. Then usually limited company status is the best. But if you're just a service business with little risk attaching, then a sole trader could be useful until you reach a certain level of profitability where taxation generally takes over and limited company status can be helpful.
There are, I'm sure, so many questions that people will want to know, particularly if they're starting up their own business. I mean, things like, how much do I pay myself? How do I deal with national insurance? I mean, how do we start working those things out?
Well, with limited companies, there is a situation where people can take directors' remuneration or national insurance related income, or alternatively, they can take dividends. Dividends are paid to shareholders in a company, which may not just be the person who's running the business, it may be other members of his family, though there are certain constraints on that. And national insurance only applies to actual remuneration. So in practice at the moment, and it may be curtailed eventually by the government, many company directors take small salaries and large dividends. So it is about the level of income streams, because there is a level of profitability where it becomes beneficial again to take remuneration rather than dividends.
I was going to ask about tax advantages, but I think you've covered that. But it really does depend on the sort of practice, sort of business that you do, whether you're a sole trader or a limited company.
It's dangerous to generalise, because every situation probably is needing a specific answer.
Yeah. Now, we all like to claim money back, don't we?
Yes.
We all like to see if we can get something tax-free. What about meals? I go out for meals locally. Shall I keep all the receipts? Can I submit those receipts?
Okay, well, first of all, you'll never recover any tax unless you've already paid it.
Okay.
But in terms of entertainment, many years ago, the government brought in a rule that entertaining customers, clients, etc. was not allowable, and therefore, whilst the company can pay for these things, if they are legitimate expenses, there's no tax relief for the company or for you. In fact, there can be situations, if it's too regular, where the Inland Revenue may seek to charge you for the benefit that you've derived from so many meals.
Right, okay. And in terms of assets, for example, I want to buy a van for my business. Is it better to buy the van or is it better to lease the van?
The leasing companies all make profits. Therefore, if you have the available resource, buying a van outright for cash is probably the most beneficial way forward. However, you've got to have regard to your working capital availability. And in the event that you have limited working capital availability, you need to look at finance. And so buying a vehicle on finance is perfectly acceptable.
What about, again, registering businesses for VAT? I mean, if, for example, there's an example that was given to me here, someone wants to start a new carpet business.
Yes.
Should they go limited and get VAT registered at the very start so they've got everything set up?
Not necessarily. There is a threshold of £70,000 beyond which you have to be registered. but you can accumulate your income until you reach that stage and not be registered for VAT. Ultimately, it's probably dependent upon who are your customers. If your customers are the consumer, then you shouldn't be registering straight away. However, if you're dealing business to business, then there's no disadvantage to immediate registration.
Right. Okay. I'm looking at investing £350,000 in a business. What should I be looking for to get the best tax benefits?
First of all, I would ask you whether or not your £350,000 is all you have.
Yes.
Because if that is the case, then I wouldn't be recommending that you invested it all in the business. But it depends whether it's your business or otherwise. In the first instance, the rules allow for what's called enterprise investment scheme relief, where you are an owner of less than 30% of the shares in a company. So that entitles you to 20% tax relief. But also, when you sell your shares, if it's beyond 3 years, there's no capital gains tax on the disposal. So that's really investing in other people's businesses. And there are a number of pitfalls to that, so it needs to be done very carefully in order to ensure that the relief's available. In terms of your own business, there's no immediate investment relief when you put your money in, unless you are reinvesting again, which potentially can be rolled over. But once again, that needs very specific advice. Otherwise, there does exist now entrepreneurs relief. Entrepreneurs relief is relating to capital gains tax. When you sell your company, you can make a gain. If you are more than a 5% shareholder in that company and have been a director or employee, then you are entitled to pay tax at only 10% on the gain that you make in that business, up to, at the moment, a maximum of £5 million. Gosh.
Okay. Employing people, I suppose that's the biggest worry that many small employers have, or small business employers have. If they've got no idea about what to do of paying tax and national insurance, what do they need to do?
Well, I think probably go and find an accountant.
Yeah.
Because the Inland Revenue will be helpful up to a point that they have helplines, but really you need to talk to somebody who can guide you through the process.
Another example here that's been given to us, a small jobbing electrician who started doing work for a local builder and has been told that apparently he needs to provide him with his CIS card or he's going to deduct his tax.
Yes.
What's all that about?
Many years ago, there were a lot of people coming over from Ireland and working on a cash basis,
right.
And possibly not paying tax. And the government became wise to that and therefore brought in a rule with regard to subcontract labour, which meant that the onus was on the employer or the company which was subcontracting to make sure that the subcontractor was a legitimate business person. And legitimacy now is measured by whether or not the Inland Revenue have given you a card which entitles you to gross receipt. In the absence of that card, tax is deducted and you receive a certificate, and at the end of the year when you calculate what your true tax liability is, you can show the certificates. Sometimes it may mean there's a refund, other times it may mean that you've just paid enough tax. And
does that work as well if, for example, I have my own factory and want to extend the factory and use my own subcontractors? I need to be I'm responsible for finding out their eligibility.
In certain circumstances you can be, but it's only the labour element. It's not the material element. Right. But once again, in the circumstances, it's always best to take independent advice at that time.
For those who are registered already for VAT, what happens if you haven't got enough money at the end of a quarter to pay it? I mean, what are the liabilities of that?
This has changed a little bit during the recession because previously the pay-as-you-earn department were reasonable if you were owing money in connection with employment deductions, and they would come to a reasonable deal, whereas the VAT office were pretty strict, probably because they could see that it's quite easy for somebody in a business to accumulate a large liability. More recently, the VAT office have been a little bit more helpful, but they know that in 3 months' time you'll have another liability, so it's unlikely that they're going to help you for more than 3 months, but there is a helpline which you can call, explain your circumstances, and they will help you to pay over a period of time.
Over a period of time.
But you must be able to show a good reason for that.
Is it worth registering for VAT even if you aren't at that 70,000 threshold?
Yes, it can be, particularly if you're buying capital goods to start your business. And also, as I said before, in terms of dealing with businesses, because there's always something that you can recover. But you do have to be careful, particularly with motor expenses, because a lot of motor expenses are not recoverable.
What about corporation tax? Do I pay corporation tax? How much corporation tax do I pay?
A limited company pays corporation tax. The basic rate of corporation tax is 21%. The top rate of corporation tax is 28%. However, there is a threshold of £300,000 profit. The £300,000 is the threshold up to which 21% is applicable. Beyond that, there's a marginal rate of approximately 32%, which is payable between £300,000 and £1.5 million of profits, which then averages out at the 28% top rate.
Right.
So that is applicable to any company. So it's just a matter of size. One pitfall there is that if you have more than one company, the £300,000 threshold is shared amongst them. So if you have 5 companies, it's only £60,000 per company.
Okay, good. Well, listen, thank you for answering those questions.
That's okay.
I'm sure there'll be a whole heap more, so if you'll allow us, we'll get you back in the not-too-distant future.
Be delighted.
Thank you, Melvin, very much. Melvin Sadofsky.